Hello, my name is Michael Glass from EminiTradingCoach.com, where we focus on trading high probability trading setups. Before we begin our video, we want to start off with our usual disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose your money. The strategies we show today are for informational purposes only. Future results are not guaranteed, and most importantly, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our weekend wrap-up for March 12, 2011. When we look at the week that was, we see that all three major indices did fall this week. One thing to notice, though, is that the NASDAQ, if you look at it, is only up 2% now. And remember, 2010 was the year of the NASDAQ, and in 2009, the push up through March 2009 through the end of 2010, the NASDAQ led us higher. And now we're seeing some weakness in the NASDAQ, and it'll be interesting to see if it's going to be what leads us lower. The market offset some of it was lower, but we had a gain on Friday that kind of offset much of the losses. 6 out of the 10 major sectors traded lower, led by energy. Their crude oil prices fell 3%. And of course, we had the 5th largest earthquake on Friday in Japan since 1900, but yet the market rallied. That was kind of interesting. On the corporate side, we had the iPad go on sale yesterday. Estimates at over 500,000 units were sold yesterday. I had my brother and a friend went to get an iPad 2 yesterday. My friend was able to get it. My brother was not. They sold out before he got into the store. So, I don't know. The personal computer, the desktop, businesses, yes, but personal computers may be seeing the end. The tablets are on the rise. Starbucks ended their strategic relationship with Green Mountain. Western Digital talked about purchasing Hitachi. And Sprint is talking about merging with T-Mobile with the the power of Verizon and AT&T. Really nothing on the economic front. Last week was really just market sentiment, and there were no real catalysts that moved the market tremendously either direction. When we look at what's going on this week, we do have FedEx, but really not a market maker. What we do have this week is the FOMC rate decision on Tuesday. So that my little Skype. So that there could be some language change in the FOMC rate decision that could affect the market one way or the other. So we'll see what happens. Also have Philly Fed on Thursday that could move the market one way a little bit, but again we're starting to get lighter and lighter on true catalysts for the market, and we're going to get the true sentiment, and maybe there may be some people who want to take some profit and lock that in as we move forward. When we look at our key technical analysis points, we are obviously still in an uptrend, so you still do have to buy the dip. It's finding where to buy the dip is what's most important. The last swing high was put in at 1344. Resistance right now is below that though, around in the 1330 range. And we got support around 1292, and we also have the 50 exponential moving average acting as support. And my point of interest is going to be the 20 exponential moving average, which is in our way to get to the resistance of the resistance. So we're pulling up the S&P 500 on a daily chart, and we can see we're starting to form a little downtrend. And that's certainly, if we're going to break higher, we have to watch to see if we can, sort of break above these wicks here. So 1320-ish would be a point of interest. You can also see the 20 moving average that we talked about, exponential moving average, as being a resistance point level. But more importantly, we can also see the support of the 50 moving average right here. And this matches up with some of the swing highs right here, this 1295 range. Matches up with this wick here. So that's the support that we found in the 50 moving average. So you also see a descending wedge here. We've got support around 1295, and we may put in a lower high, and we got this descending trend line. So this has to resolve one way or the other. So, again, we want to watch what happens as we get back up into the 1313 range with the 20 moving average. We want to watch as this descending trend line comes in. We want to see if this 1295 holds up for support, and which way we're going to resolve. Our indicators have come out of the overbought range basically since mid-February, and now we're kind of in the middle of the range. MACD is coming down, stochastics are getting down, so that's good, setting up a buying opportunity, but we may go sideways for a little bit more before our indicators say that they're ready to go higher. Let's scroll out from our daily to our weekly charts, and they're now finally coming out of the overbought. You can see coming out of overbought here. MACD's crossing over, stochastics coming down, and we've got a momentum change on a weekly here as we've had 3 down weeks in a row. We are finding a little support in here at the 10 moving average on a weekly chart, but more than likely, you can see we held up at the 10 before on our last pullback. So there is, and we came back here. So there is reason for us to pause here on a longer time frame. So that's good. But let's go all the way out to a monthly chart. And you can see we're kind of putting in our first red month in a while. And we're kind of caught in between a zone here of the resistance of 1350ish, which is our swing high, and below us at 1275, and we're kind of sitting right in the middle. Our monthly charts finally give us a sell signal on stochastics. RSI is heading down, and MACD on a monthly, it doesn't seem to be in sync with the market pretty much at all. Be interesting to see if we turn down here. So what we're seeing here on our S&P 500 chart is some strong support here on a daily and a weekly. Reason to pause here, but this needs to resolve itself. The downtrending line, and as we stay here at support, we need to break higher or break lower. So that's what I'm going to be watching. 1290 on the bottom, 1295-ish, and again around the 20 moving average, 1320s on the top side. Let's look at the industry leaders. So we're going to start off with Apple. We can see obviously a beautiful uptrend that Apple's been in, and we can see the 50 exponential moving average acting as support. We are decelerating, and there could be some more room to go on that deceleration. But we can see on our intraday chart that we're kind of putting a little ledge here around 352. You also can kind of see that on the prior day too. So you can do this 2 ways. If you're real aggressive, you put an alert around 352. I would say 352.50ish, and that would get you above 352.75. I would go probably 50 cents higher because the Apple can move, and that will get you above this consolidation from the prior day, or actually 2 days ago. That might act as a little resistance. There's a reason why we stopped right here. Well, that's kind of where this whole Wednesday was acting. So I probably would want to put my alert a little bit above Friday's high just to see if we're going to break a little bit higher. Let's see where the 20 moving average is. That's at 351. You might even go as far as up to that. But most importantly, Apple uptrend. Currently descending, put in a lower high just like the market. We want to see this 50 moving average hold. As a motorcycle goes by. Look at Amazon, already through the 50 moving average and possibly heading to the 200 moving average. Let's blow it up a little bit. Nice head and shoulders, or if you just want to go ahead and call it an M pattern. You can see where we broke the M. Depends on where you want to put it. Around 170. And we're broken that. And these wicks back up here are showing that it's holding up as resistance now. Daily chart. Look at the intraday chart. Just messy. Completely messy. I don't see a trade on Amazon right now. Google already broke the 50 moving average. Again, that weakness, the NASDAQ possibly leading us lower. Heading down towards the 200. We do have some November action to watch here at 562 as it's heading down. and it's decelerating. But the difference here on the intraday is that we do see a clear, move down. We did break the 20-moving average, which was acting as resistance on Thursday. We did break that. So you can go two ways with Google. Let's blow it up a little bit. With Google, you can put an alert around 576. That's a $3 run down to the intraday low of Friday. Or you can just use the intraday low to see if we're just going to break down, which is 573. And again, we've got some support in here in this 564, 560 range. So that's how I would play Google. It's in a clear downtrend from January, and it's already showing weakness. Ooh, and we have the death cross. We have the 20 breaking below the 50-moving average. We'll go to financials, and Goldman Sachs already broke the 50. Notice the Apple's the only one holding up so far, possibly heading down to the 200. Chart looks very similar to Google. I probably would go with an alert below 158. Just trying to compare what's going on here. You can see where we are on a daily. This 159 range gets us below this action, but it doesn't get us below this action in here. So you have an aggressive alert around 159. Basically put an alert below Friday's low. And then we do have some wicks in here in this 158 range that we have to be cognizant of also. 2 days in a range, I would go ahead and put an alert above the range and below the range and play that. And so that you would go with the 159 range for Goldman Sachs, because we have this tight consolidation of 2 days. It's probably going to burst one way or the other. Netflix held up on the 50, broke below the 50. We don't have the death cross on this one, but we are below the 50, and possibly with Friday's action, the 50 may now be resistance. To go bullish, I would want to see it get back above the 20. Maybe go with an alert below 201 to go bearish on it for a continuation of the move. But I probably pause for a little bit here. We look at these wicks, the swing high here, message with the swing low here, 194. That's still $8 away. Maybe no trade on Netflix right now. Maybe no trade. Due to the time, we don't have time for our educational portion of our video. We usually use the book Trade Your Way to Financial Freedom. So we wanted to talk about our resources. You can find us on Facebook, YouTube, and Twitter, Emini Coach, Emini Trading Coach. We have a great 5-part video course on how to develop a high probability trading setup, which will be a great introduction to our video curriculum. Only $250. It goes over the basics, 3 separate videos: the building blocks of trading, technical analysis, chart patterns, trading mindset, trade management. And then the second video is all about what should be in your trading plan, how to determine the direction, location, triggers, and management of trades. And then on the third video, we get into specifics of specific trading setups that you can use, high probability trading setups. But the reason that we're not charging $3,000 or $4,000 that other people use is because we believe the true investment that you should make is in coaching and developing that trader's mindset. And we work with you hand to hand, one at a time, to develop a personalized trading plan so that you're able to pull the trigger on a trade. We still have a great relationship with a futures broker. Emini margins low as $300. Great commissions. 20 free trades if you sign up through us. And for those of you who really appreciate our technical analysis, we have a Forex blog where we give the same great Forex technical analysis that you see here on Emini Trading Coach. So as we said, it does make a difference about your system, indicators, newsletters, trading room. If you're not able to pull the trigger, you're not going to make money. And so that's what we're here through our mentorship program. We help you develop that trader's mindset to be a profitable and successful, consistent trader. Thanks, guys. I'll see you next time.